Let's discuss the current macro and micro setup with Mr. Wwatch, Managing Director with Dalton Capital Advisors. Mr. Bhatt, good morning. Thank you for joining us. Mr. Bhatt, we've put a very news-heavy and highly volatile month behind us. What is in store for us in the month of October? Because September was all about high volatility and no return.
Well, I think things are not looking very bright even in October. The fact being that you have the U.S. government almost coming to a stop, possibly by midnight today, or even the debt ceiling discussions, which should go well. If not on October 17, we have a serious problem there also. Plus political uncertainty, even in Europe, for that matter. Italy, I think there is a huge political instability there. Greece, there's again some more dose of political instability. So therefore, generally, things don't look very good in the international scene. And finally, FII flows sort of decide the direction of the market, and doesn't look like as if October is going to be a great month for us, even though September has seen some very good inflows despite all these uncertainties. In India, we have a situation where, after a long time, people are really convinced that interest rates are probably heading upwards. We have problems of a current account deficit, which I think today we will have some inkling about how that would be for the September quarter, which is likely to be, probably worse than what most people expect. So therefore, I think things are not really looking up. We have an earnings season coming up, which I think are probably likely to be best forgotten, because there is hardly going to be any growth at all. The state of the banking system is quite pathetic. In fact, I was just reading a report from a credit rating agency which said that if most of the public sector banks, if you take the non-performing assets plus the stressed assets, most of the public sector banks really have no capital. So therefore, there is a huge recapitalization required for public sector banks. I think things probably cannot be much worse than this.
Mr. Bhatt, what about the earnings season? Because that's going to be a crucial one this time around. Any positive surprises that one can look out for, or do you think it's all going to be a red blot?
I don't know whether it will be a red blot, but I don't think there would be any, even if there is earnings growth, it is going to be anemic. The only sort of plus expectation in terms of a positive momentum could be in sort of pharmaceuticals, could be in IT, but other than that, most of the others are going to be in very bad shape. Especially, I think one shudders to think the sort of numbers that are likely to come out of public sector banks. It's going to be quite daunting.
Mr. Bhatt, whatever red flags you are raising, I guess they are all valid. But all the concerns are not new. Current account deficit, global uncertainty, low expectations from Q2 numbers, that's out in the public. Do you think all the bad news is currently getting discounted by the market because there is nothing new about it?
Well, with the market being somewhere near 6-7% of the historic highs, one can't really say that all these are factored, and we have had a huge run up from 5,100 to almost 6,000. So therefore, this run up is largely based on some inflows in September by FIIs, but that could change based on new information, and this new information is something that would come up probably initially with the earnings numbers in the next couple of weeks. And thereafter, we don't know, it has a life of its own. We don't know where it will take, and also coupled with huge, a different dimension of uncertainties as far as the international market is concerned. So therefore, these two factors can sort of bring back the market to much lower levels, because with all these uncertainties, probably there is no case for the market to be just about 7-8% below the historic highs.
So will we be able to defend the last time low of 5150, 5200 thereabouts, or do you think there is the chance that the market may slip further?
Well, I don't know that it will slip so dramatically immediately, but I think all new information, if it is going to be negative, I think it will sort of slip slowly down. Quite possibly. At least as of today, it doesn't look like as if there is some positive news that is likely to be on the table 1 week or 2 weeks from now. Things other than probably some more of expectations being sort of talked about from the government circles about current account deficit being, much lower than even, 3% this year and stuff like that, which is in the realms of, sort of imagination as of now. But the immediate figure that we're going to get is probably later today, and that is not going to bring any comfort to anyone.
Mr. Bhatt, if the economic outlook for India is bad, and if there are no triggers in the short term which will generate upside momentum, in that kind of an environment, exporters should do rather well. But in last 8-10 days, IT stocks have shown precious momentum. Why have IT stocks started, why have they not appreciated?
Well, the rupee has been going all over. Rupee has appreciated, except for, of course, Friday, but otherwise rupee has appreciated a bit from its recent lows. So that is when IT stocks probably were sold out, and people were looking at probably other sectors. But I think the fact of the matter is not. There is no great one-to-one correlation between IT stocks and the state of the rupee, because most of the say few quarters earlier or a couple of years earlier, all of us were talking about IT stocks should be the IT companies should hedge all their receivables, and so therefore quite a lot of these companies have hedged probably almost 1 year of earnings. So therefore it is not as if just because there is some depreciation of the rupee, it will immediately translate into great earnings growth for these companies. Over time, yes, I think efficiency gains are the only way to get earnings growth. These are all short-term measures which might affect a quarter or two, but I think in the long term, the sustainability of earnings growth is based on efficiency, which the recent results have not shown that that is somewhere that we can draw great comfort from.
What is your take on cyclicals? BHEL, Thermax, L&T, cyclicals have made a comeback. Is that just a technical rebound, more like a dead cat bounce, and cyclicals are still dead money?
Well, there's been some effort on the part of the government to get quite a lot of these projects which are stuck midway, getting them to back to life. I think that is something that has given some hope on the capital goods side, but I think it's early times yet. I think it is sort of jumped the gun, as it were. There is still quite some time for all the approvals to come and these projects to hum back to shape. So I think it's a bit too early, but that's a sign of the times that even a little movement somewhere causes a disproportionate large positive movement on sectors like the capital goods, because there is so much of desperation to find some good news somewhere or the other.
Mr. Bhatt, what's the view on the OMC pack? Of course, there was a deal between BPCL and ONGs and Videocon, or rather gas discovery in Brazil, which led to shooting up of BPCL. But it seems like there is going to be a petrol price cut, or at least that is what the murmurs are. Any trading opportunity when it comes to the OMC pack, or is it still in a void?
Well, I think most of these companies are best avoided, because if most of the commercial decisions are taken in Delhi, these companies really are notionally listed. I don't think they can really be considered as commercially oriented companies which can stand the test of market analysis. So I think these are best left to themselves.
Mr. Bhatt, you run a long-only fund. So what's your portfolio strategy? If your mandate is to generate absolute return irrespective of market cap and irrespective of sector, where are you finding opportunity in today's adversity?
Well, we need to be invested in stocks. There is no doubt on that. So therefore, you do your best in terms of finding the sectors and stocks which are likely to perform better in relative terms, given the general sentiment in the market. At the same time, when there are big events which you don't know which way it will go, you need to protect yourself through futures and options. But other than that, I think quite largely you should be probably worth it being invested in sectors like pharma or to a limited extent even FMCG. Other than that, really there is no great overweight that you need to put in any of the sectors, and given the nature of the business, you really can't be too much in cash. So therefore you need to be invested. At the same time, keep seeking protection whenever there are big events which might unsettle markets.
I just want to draw your attention to Infosys, because soon we would be staring at Infi's earnings and perhaps, kickstart the entire IT pack and the mood really towards the IT sector. What's the expectation from Infi this time around? Could it be as big a surprise as we saw in the last quarter?
Yeah, I think to the extent that rupee has depreciated a lot, and there is a lot of hope that that'll translate into earnings growth for Infosys. That could be something that people are expecting, but I do not think that all these heightened expectations may be met squarely, because we still have a situation where probably valuations have given have put Infosys back into sort of sainthood territory, and we don't know whether they would sustain that sort of valuation, depending on how there is a dramatic turnaround, if at all, as per expectations, in terms of earnings and in terms of new strategy that should be in place. So I think this space needs to be watched very closely, but there is some scope for disappointment.
Pharma as well was another mover all of last week. Of course, besides names like perhaps a Ranbaxy or a Wockhardt. What is it that you're liking from that pack?
Well, generally that sector itself has given a good account of itself, except that some of the big companies have had continuous problems with FDA. But those which have not had these problems, I think that they're doing well, and I think that is probably the only sort of place where one could hide under the circumstances.
So, Mr. Bhatt, what is a prudent course of strategy in this kind of a market? Because there is only a limit to how much ITC, HUL, Sun Pharma or Infosys one can buy in their portfolio.
Well, yes, that is certainly the case. There certainly is nobody's argument that these stocks are cheap. But given the element of uncertainty that is overwhelming, I think these are the places where people tend to hide and hope that there will be some direction to the market given on account of either policy measures or something happening in the international scene, so that they can churn the portfolio. I don't think lots of big investors are very comfortable investing afresh in these stocks at current valuations, but I think that's the best of a bad bargain.
But Mr. Bhatt, should one really stop worrying about local factors? Because despite a weak macro, foreigners were net buyers in the month of September. Even though the earnings outlook for India has not changed, rupee has not stabilized, despite all the macro concerns, markets have appreciated by a good solid 7 to 8% from the recent low.
Well, part of the reason is that the taper has been put off a bit, so therefore there is further inflow on account of that. But in the next few weeks, we'll again start talking about the possibility of a taper in October or probably November or December. I think that will put paid to this sort of aggressive flows. But I think finally, except in the short term, even international investors are going to be really concerned about how India is making itself a very good place for a destination for new investments. So while there could be some problems in the short term about interest rates, about current account deficit and stuff like that, but there has to be a sustainable plan that should be put in place for addressing these concerns. And given the element of huge uncertainty that we're going to have in the run-up to the elections, state elections and then general elections, I don't know whether that sort of money would keep coming if indeed the tapering happens in October or November.
Mr. Bhatt, really appreciate you taking the time out and joining us this morning.